Hello, friends. How's everyone doing? Hope all is well with you and your family. As you know, we've been covering about the home buying process. In our last episode, we covered, negotiations. There are different programs that you can go through. There's a grants you can go through. So, let's talk on the closing process today, okay? And first of all, I just want to say this is Ruby Singh with the Real Estate News School, and I just want to thank you from bottom of my heart, for all your liking, subscribing, commenting on those wonderful comments and how you sharing these videos with your loved ones. So I really, really appreciate you guys and those lovely comments. That's definitely makes my day. So I really, really appreciate you guys. So thank you so much. And let's talk today about closing process, okay? Because when you're deciding to buy a house, that brings like many challenges, right? Because especially for those who are not much familiar about how the whole process work, how the purchase work, how the transfer, financing, all that. So I want to cover all that today to help you guys out. So many of you guys wrote in the comments, that you want to know more about this since um, you said you already know so much through these in my videos and on this channel and through the playlists, all those sections that is covering, and it's definitely helping you guys. But you also had a concern about closing, how much, the cost and closing process. So I want to cover that today, help you guys to see what goes into the whole real estate process. And as I said, all I'm, bringing all that experience, years of experience that I've been working in real estate and, finance mortgage industry. So that I'm bringing it to you guys. Okay. So, to help you out. Um, so let's talk on that, because we'll cover on uh, when you do the real estate purchase or you're doing the financing, what goes into it. Okay, so because there's so much more goes into this, like insurance, the warranty, appraisal, mortgage statement on the property, right? We covered all that. So if you haven't watched those videos, please go back and watch all those playlists, the buyers series playlist that will show you from beginning to the end. If you're planning to sell your house, then watch the seller playlist, on this channel. It will cover all the process from A to Z when you're planning to sell the house, or if you're planning to invest into and learning about investment. Watch the playlist on this channel on investments. So there's all those topics are already listed for you guys uh, separately. So please go back and watch, and that will definitely help you out. Okay. um, so as we've been covering all that, what goes into in the purchase, the insurance, the warranty, the appraisal, the mortgage statements, so, and of course, we just covered about the points and all that. I explained that to you guys, for the loan, what goes into the loan, or if you're planning, you're looking for the government grants, how you can get that I covered that in the previous section. So please watch that. So let's cover. I mean, I want to make sure that that you guys know, you know, what goes into when you are closing your deal or your first time house, that the house you are buying. Like, so because, these kind of points, the reason I'm bringing, so it doesn't get, um, out of out of hand, right? And you follow, you know, these tips to in order to avoid letting the deal fall through. Okay, so let's talk on homeowner insurance, guys. Okay, so make sure that you are covered in the homeowner insurance section, because un okay, unless you're paying the sale price of the home in cash, your lender will require the purchase of, homeowner insurance from you, okay, before closing. And after the agreement, when you purchase, agreement, after the agreement, but before the closing at the title company, okay, at the escrow, okay. So it had before the title is transferred to your name, they require that you have to have homeowner insurance, okay. It's actually also seller's obligation to ensure, that appropriate insurance coverage on the house of the property, and immediately after closing, when title transfer to you as a buyer, seller is no longer obligated to keep the insurance on that property. Okay, they did it when they were living in the house, right? And if they have a loan, lender, the banker, the loan, um, they officers, they require that you have to have insurance on your house property. Okay, so when seller is not obligated to keep the insurance, or they have no longer insurable interest in that property, so that's it. Seller coverage is gone, right? So if God forbid anything happen, um nothing can be done, and lender won't lend you the loan unless you have the coverage, your insurance coverage. Okay, so that's why you, as a new owner, you must have homeowner insurance coverage in place, because in most cases you'll be asked to provide proof, right, that you prepaid 1 year's worth of coverage before the lender will set the closing. So the lender, actually, they hold a lien, okay, on the property. They hold a lien on the property until the mortgage has been paid off. Okay, so they keep that. You have to have insurance coverage if you have a mortgage on your house. So that's why lenders use that to safeguard their interest, and they want a financial protection, because that is in the form of insurance policy to pay for the cost, or God forbid, if anything happened, to rebuild the house if any disaster happen, you know. So they want their asset, their finance to be covered, because they are giving you the loan, correct? So the standard homeowner owner's insurance policy, it generally protect against the fire, against any lightning happen and the fire happen, any windstorm, or if it's a damage, there's a hail happen, or if or any theft or vandalism or smoke damage, right? Any like trees or branches or tree fell on the house, right? And it break it, or it damaged the, for the hail, for the ice, snow, sleet, anything, or a frozen plumbing, correct? Heater, AC, any other household system. Okay. So vehicles and even like aircraft, you know, that's not vehicle itself, but object, it's could be object of, auto insurance or damage. For example, if the car runs into your home, or any riots happen around your property, or civil, commotions happen around your property, or any explosions happen around your property. Okay, so that's why there's a requirement to have a homeowner insurance, because policies that also include coverage, the homeowner policy insurance policies, they also actually cover for any liability, any personal belonging, any structure on the property, any carport, fence, any living expenses. So if your home becomes, temporary unlivable, insurance policy will cover that. Okay, because there are advantage of paying homeowner insurance upfront at closing. So rather than escrowing the cost within your monthly mortgage and paying your homeowner insurance premium, all at once before closing, it allow you to exclude or premium from your closing cost. Okay, so usually it include lender and other fees, where which is you are, as a borrower, you are responsible, in addition to your down payment, your closing cost. These all are generally paid in one lump sum. You know, you may also, like, you can choose, set up an escrow account, depending on your mortgage agreement. So to avoid paying large sums of homeownership cost, the escrows is 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 like a it's like a saving account, designed to help you to pay your mortgage and property tax and even homeowner insurance in installment every month. Okay, that's why as I said, you might have to go back and watch those previous videos that I covered, where your principal of the loan, your interest of the loan, taxes, yearly taxes, and your property insurance installment, everything is divided into monthly payment, and it goes into one lump sum payment. It's called, usually they call it PITI. So please go back and watch those videos, because um, I explained that in depth in those videos, previous videos. So PITI, again, it's the principal of the loan, interest of the loan, your property tax, yearly property tax. That is because it depends on the area where you are living, right? So the taxes could be a lot, yearly tax. Okay, so what the lender does, they instead of coming up with the lump sum money every year, right, they divide that into small portion, and they put that into your payment. Okay, and same as your insurance, you know instead of paying all that lump sum, property insurance uh, at once, it get divided into small payment, and it get included into your mortgage payment, right? Monthly mortgage, your loan payment, and then it becomes, that's why it's called PITI, and it's a lot, better and easier to pay smaller amount than coming up end of the year with large amounts. And sometimes, taxes could be a lot, it depend on the area you're living. It could be sometimes 7,000, 10,000, 15,000, 20,000. You have to come up yearly taxes. Okay. So yeah, that you don't have to worry about that. Your lender usually deal with the payments from your escrow. It means, it's a less stressful for you as a home buyer, you know, financial management, right? It's a less stressful coming, you know, breaking into small portion than coming up with the large payments at the end of the year. Okay, so that's why this covers section covers and want to cover, make sure that you guys know that insurance is also a big part. It plays a huge role in closing. If you don't have insurance, that's it. It's the it's not gonna close. Lender won't let you close the loan. They won't let you close the escrow, and so you have to be prepared and search for a company when as soon as you have a property address and everything, that loan is in place, your purchase agreement is in place. So everything is good and you know the address. So I would recommend, start shopping for your home insurance. Okay. So that's called homeowner insurance. So another is a, you know, point I want to bring is home warranty. Okay. So make sure, guys, that you know there's a big difference between home insurance and home warranty. Okay. So don't mix together, because whether you are a first time home buyer or you are an empty nester, you downsizing after several like previous home buyer, it might be like a smart idea to have a home warranty in your plan, because you can sleep well if you have a warranty, home warranty, which is if anything breaks down, you can call the warranty company and they will pay for the cost. um, but I just want to let you guys know that's another separate expense from homeowner insurance. Homeowner warranty is a different company, it's totally different animal, it's totally different cost. Okay, so whether either you are a first time home buyer or you are, downsizing, uh, you know, it's good idea to have a home warranty, and so you don't have to come up with the big expense at same time. So the advice also applies to like you know uh, real owners who are uh, experienced owners, who just don't want to have uh, they don't want to worry about maintenance and repairs, and it's always hanging over their heads. So the home warranty is the way to protect yourself over, anything breaks down. It's a way of protecting from if anything breaks down and it's really big expense and unexpected repair bills shows up. So depending on your local market as well as the deal, the home warranty, it can be paid either by the seller or by the buyer. Okay, because a home warranty paid for the seller can be negotiation point, um, for inducement of the offer to protect the buyer from having to any additional expense, repair, expensive repair to the house after the deal closed. So sometimes the sellers, they offer the home warranty, or sometimes you can ask to add the home warranty when you're writing the offer. Okay, because the cost of the home warranty, sometimes it's not too high, But it could be between like 350 or 650 or 600. It could be, it depend on the coverage, right? What kind of coverage you want. So, because the payment must be, it must be made, 1 year in advance. And usually sometime, seller, they offer that if they are planning to sell their house fast or something like that. So they offer that they will offer a home warranty, 1 year of home warranty. So if you're planning to buy, make sure you ask the seller or make sure you write that in the offer that you want seller to pay for the home warranty. Okay. So in case you need to use like, that kind of warranty, and it's usually the procedure is very simple. Okay, because sometimes when there's a problem, the owner, they call the home warranty company. Okay, the home warranty you have, they call the home warranty company. It announces that service, what kind of service you need and who will be fixing it. So you let the home warranty company know, and the provider, they will call the owner to schedule the appointment and to fix the problem. Okay. So that the home warranty company, they will pay for the service of that bill. Okay. And of course later on after 1 year, uh, like I said, sometimes seller, they offer 1 year home warranty, but after that if you would want to continue, you have to pay that, right? Because it's for only 1 year. So you have to also, another thing guys, I want to bring it to you guys, that you have to be very careful when choosing a plan, because there are many existing coverage. There's different type of coverage. You should pay it, make sure you pay attention when reading the fine print, relating to the condition for the coverage and reason for that claim that may be denied. Okay. So the secret to getting a good insurance plan, it rests in dealing with the, make sure it's a reputable company, and they make sure you as a home buyer who is buying that warranty company, you know all the details. Okay. So that should, I'm sure that now you understand the difference between homeowner insurance and home warranty company. Like I just covered that. Okay. Also, um, another main point I want to bring, the appraisal when you closing the deal, that you should know the difference. What is the difference between the appraisal, uh, from the home evaluation or of by the property inspector, because appraiser, who appraise your property, they are state licensed expert. They determine the value of your property. They, when it comes to closing or financial transaction involving a property, so both the seller and the buyer, it depend on their evaluation, because the procedure is to, when they appraise the property, it's to protect you as a buyer, as well as the bank that offer the mortgage loan. They do the appraisal, right? So because it's like they also don't want to be, do the overestimate, overpriced piece of real estate, right, of that property, because the property appraiser, they aren't the same as property inspectors. And we covered that too in previous section. So I covered that in detail. So if you haven't watched those, go to the playlist and go and learn and take the notes of all buyer section. Um, that will cover everything because I covered that in detail previously about the property inspection and property appraisal, right? Take the notes, and if you don't want to, you can always go back and watch the videos, or someone is, if your loved one is planning to buy that, share that playlist with them, and share the videos with them to help them out so they don't make any big financial mistake. Okay. So the difference between an appraiser and an inspection is that former, you know, it will look only, it's like they look like only obvious issues. Okay. Check with, because if you want that more detailed manner, you want it to be checked, such as plumbing, air condition system, you know. So the appraisal report, guys, that is required by the bank, and the cost is like, it's including in the mortgage cost, in the mortgage closing cost. Okay, guys. So that's another expense. You guys have to remember that, because appraisal expert, they evaluate the property using one of, sometimes they evaluate, by the sales around the area, any comps, comparisons of other properties, approach by comparing your home, right? The property you are buying with the similar one that were sold in the area. And, it's like if your home is 4 bedroom, so that's what they're gonna compare that with, or the square footage, or, what kind of house you have, or what kind of builder, if it's, you know, if it's a similar builder for that property. Okay. So that's, the whole cost is also, it could be also in a new buildings, or it evaluate the cost of replacing structure of that house. So value of, you know um, prepaying, I want to cover that also, that all that covers in, it's a cost, right? The appraisal and home inspection, that's another cost. It is your cost. You have to come up with it. Okay. Because also you have to think, prepaying your mortgage, you have to see if it's a great idea to prepay your mortgage. If you can, you can reduce the cost of, you know, incur together interest, and you can save thousands of dollars in the long term. So to prepay the mortgage mean that you pay the amount you owe to the lender, right, before its due term. Because to do so, like, sometimes it's important to understand some of the most popular methods of doing this. Like, some people, they decide to pay monthly sum, above the mortgage payment. This amount get applied to principal, not the interest. And doing so consistently can save you a small fortune in the long run. So another way, reducing interest through a system of making, you know, 13 payments in a year instead of 12 payments. So uh, what what that mean is that you just send extra payment, right? Um, every time, whatever you can pay. So it helps to pay off the mortgage faster. So this is the, when you shopping for mortgage, some mortgage have a flexibility policies, but it will allow you to make extra payment as you consider fit, without any restrictions, right? So sometimes terms of like overpaying a loan are strict, and it require a penalty for those who are planning or prepaying the mortgage. These terms are detailed in repayment and penalty disclosure or section of the document. So be sure to examine the documents carefully. Okay. Um, Another point I want to make, guys, that what can, sometime loan doesn't close or the deal doesn't close. You have to keep that in mind, because it's not always gonna close. Okay. There are hurdles sometimes you have to go through until the closing statement is signed by both you and the seller, right? Till then, nothing is certain. Okay. So sometime deal might fall apart from one day to another. You one day you are thinking, okay, everything is gonna go good, and next day the deal fall apart. So sometimes there's a common mistakes that may seem like insignificantly for the buyers at first glance, like, sometimes lenders say yes, and something comes up and here you go. Next morning, it's no, you cannot have this loan. The deal doesn't go through. Okay, so you have to be careful with the big purchases, guys, because while trying to obtain a mortgage, because we're charging make sure you don't charge your credit cards with thousands of dollars, with unnecessary things, or buying furnitures before, or opening a new line of credit, or these kind of things, or buying a car, or uh, applying for any other credit card, or applying, it's threat these kind of things, it threaten the deal. So don't do anything before till you get the key in your hand. The deal is not closed. Again, I'm repeating that. It happens so many times. It's does it make sure it does, deal is not closed till you have keys in your hand. Okay. Anything can happen till then, because lenders, they do the verification, they do all the checking, even your employment and everything, till the last day, even after, you signed all the documents, and you think, okay, I signed all the documents, now that's it, I'm gonna get the house. No, guys, anything can happen, so because they may, you know, because when you're buying a furniture or opening these kind of, new credit card, or if you buy the car, or it threaten the deal, and lenders, they think that you are cutting, the funds that are reserved for the real estate payment. So they get like it's a red flag for the lender. So don't do anything till you have the key in your hand of your home, of your dream home. Okay. So and it's sometimes, guys, it's highly important to make sure that you act responsibly, you turn in all the required paperwork on time, you ensure that you have enough time to review the closing statement, you know so there's and don't delay when you're signing, schedule the appointment. Soon as seller sign, you schedule the appointment, and talk to your lender when you can sign it. So there's so many like details involved. The money you receive, if you receive from money you received from your family or your friends, uh, sometimes this kind of income should be cleared, also be cleared with the lender early in the process, in order to for sums to avoid being considered, as a further debt. um, in another way, I would say, when you delay the closure, is by, I if the job is changing, because even after you sign, the lender, they will verify with your employer that you're still working there. And if you change the job, or if you switch the position, or the job, you know, or the position, something happened, uh, the deal can fall through, because these action, it's very highly questionable for, um, because if your main income is no longer based on your monthly salary, or if it's a commission, or it's bonuses, they have to, it's a red flag for the lender. So the unstable nature of commission is based income, it might threaten the deal. Um, so you have to be careful with these kind of points. And also when so let me also cover that, guys. I know we covered that before, but I just want to make sure that you guys know step by step what goes into it, when you're closing. Um, if you're, especially if you're a first time home owner, right? First time you're buying the house, you're opening the escrow, correct? After you get the contract, right? Your purchase contract, the first step to closing the deal and unlocking, your beautiful house, your dream home, the front door of your dream home for you and your beautiful family, that is to, of course, is to open an escrow, right? So escrow is a, it's a, how would I say that, it's like a, it's a contractual arrangement in which, third party, they receive the money or the documents, or the primary transaction parties, um, depend on the conditions agreed, or transaction parties. As so escrow on average will last approximately about 30 to 31 days, like 1 month, right? But during that time, the third party is taking care of the transaction, right? On both seller and buyer's behalf. So there's a seller, there's a buyer, and the third party is what? The escrow. That is the middle, who's taking care of seller, because you cannot directly talk to seller, right? Correct? And seller cannot directly talk to you. So it's the middle party, which is the escrow title party, to make sure, um, all the deal, the county transfer, everything goes smoothly. That is the escrow company, where you put your deposit when you write the offer, and the offer get accepted, and you put the check there. The check is your check, right? But you're putting as a deposit that, okay, yes, you are the one who's going to purchase this property, depending on the contingencies, which is contingencies, if anything, seller need to fix, or loan, or appraisal, all these things, correct? So, so this third party is taking care of the whole transaction, whole deal, when you buy the house, which usually take 30 to 31 days on both sides. It's helping both sides, seller and the buyer. Okay. Like if you're providing an inspection as a buyer, you deposit fund to the escrow account. Call is to negotiate beforehand. Okay. Like, but and also there's a escrow fees, right, for that. And sometime unexpected fees you might only become, aware during the payment, because they were hidden. So you make sure you check all documents, you make sure that, you know your lender explain everything to you, your loan officer explain anything, and you also go through that paperwork. So anything is questionable, make sure you check on that. Okay. So you understand the escrow company fee, before entering into agreement, that it's not just the house. There's gonna be a fees involved in the closing. Okay. So opening the escrow, and also I want to bring, lock down your interest rate. The price for the mortgage loan is sometime it's a point you pay to get a certain interest rate. Remember we covered again, we covered that in previous sections. So when you get how to get the loan, home loan. So check on that. I cover in detail about the points. Of the loan, right? So because these points, they are sometimes they are actually a prepaid interest. Okay, so the more points you pay, right? Remember, it's 1%. 1% is equal to $1,000. 1 point. I'm sorry. 1 point is equal to 1%. And suppose it's a 100,000 loan, for example. For that, it will be $1,000 for 1 point. So the more point is paid, the lower the interest rate. So 1 point is equal to usually 1% of the loan amount. Mortgage rate, it log guarantee, it's a mortgage lender. They will have a buyer a certain interest rate, a certain price, for a specific time. A rate lock, it protects the borrower, from rising interest rate in the period. Sometime it's between the sale agreement, execution and closing, in a month. So sometimes rate change so fast. Like if you, as a buyer, you're locking down the rate for 4.5%, you know, you have to pay 4.5% interest if the rate rise, you know, because it can rise, it varies from day to day. If it's, 4.5% now, anything can change the next day. So you make sure that your rate is locked, okay, at 4.5% interest rate. That's example. So if rate rise, when you're going through the loan application process, your rate is locked. It's usually good for like 30 or 45 days or 60 days. So make sure you talk to your loan officer, your lender, to make sure that rate is locked for that certain amount, period of time. And then it can be shorter or longer. It depends, right? So the time period to lock rate. So after like the period that expire, buyer is no longer guarantee, the lock rate. They will, if they, unless the lender agrees to extend it. So this is why arranging a prompt closing is very crucial. So and this is when you make sure you lock the rate and you talk to your lender, right? um so we covered, yeah, opening the escrow, locking the rate with your lender. Home inspection, I also want to cover this point too, because you have to make sure that roofing shingles, they don't fall off, on the first day in your new home, correct? Or you start the furnace and it doesn't operate, or it's so make sure that you have a home inspection done, guys, and that's another cost for you. Yes, but later on it can save you tons of money. because if you don't have a home inspection done before, right? Once the deal closes, seller has no liability to take care of any of this issue, right? So that's what I always recommend to, people, my buyers, sometimes they want to save money on home inspection. I would say no, I would definitely recommend them to make sure you do the home inspection while you are, going through the process, because once the deal closes, that's it, because this way you can come back. um, if the furnace is not working, you can come back and ask seller for the credit, right? Or have them make sure that they repair before the deal closed. Otherwise, it could be very costly. Sometimes it's, you know, the AC or the furnace, it's 9 to 10 grand. So make sure you have your home inspection, whatever need to be taken care, you know, that will, your lender uh, knows about that, you know, not the lender, your agent, sorry, knows about that, and they go back and talk to the seller's agent, and then they ask them, okay, um, you know, it's need to be repaired because it's a cost for the new buyer. So make sure you engage, check the condition system, plumbing, electricity. You could save thousands of dollars, guys, as I said, um, by uncovering these existing issues. They will also check mold growth or other possible environmental health issues. Sometimes there's a mold growing. That's a health threat, guys, right? And it could caused by a lead or by a fungus, right? Or asbestos. So those are kind of dangerous, right? So that's definitely a health issue. So make sure that's all is inspected by the home inspector. And they will actually recommend, sometime if they see all kind of these kind of fungus or a lead or a mold or asbestos, you might have another cause. If it's really really bad, they don't uh, fix that, then you have to hire another company. They have to come back and fix all that, and they have to check in deep. But that is all that before the escrow close. Because if the escrow close, if the deal is closed, that's it. Then it's your problem. Then it's no longer seller's problem. Okay. So that's why I said that home inspection, make sure you guys go through the home inspection. Okay. Um, Pest inspection. Okay. There's another home inspection is different. Pest inspection is different. The best approach is to hire, licensed pest inspection company. They will check your, the property you are buying. If it's a contamination of, any kind of termites or mosquitoes or beetles or, bees, or ants or any other type of pest that is uh, in infants um, infecting the property, because sometimes even the small number of termites, they can do the big harm, guys. So these issues, they will lead you to major repair expenses and even a health issue. So presence of any kind of contamination, that has to be in your offer, in your counter offer, in your, any I'm sorry, in negotiation or renegotiation of the offer of the term, as a reason to rethink to complete the deal. Okay, so make sure you have the pest inspection is done too. Another point I want to bring is that make sure that you fix all issues, right? Even after the inspection, like if inspections they reveal any problem, you may want to ask for price adjustment, right? Your agent to cover the cost of the repair, to ask the seller to fix the problem. Some inspector they advise to look deeper into the issue. They say, sometimes they say you should ask for second opinion or you evaluate, further with the specialist. So it's a highly recommended to discuss the estimate and fix the issue as soon as possible, right? Um, because, you know, the longer it stays, the deal is not going to close. So you have to look, if there's an issue, you look into uh, in detail and evaluate with the specialist. Okay. Um, Another point I want to make is the title search and the insurance, because title insurance that is needed to eliminate the potential of loss by third party or ownership on the property that you are buying, because the title insurance, guys, it protect the real estate owners and the lenders against the loss or damage due to any kind of liens or defects in the title. Because each title insurance policy, guys, it's subject to the terms, the conditions, the exclusions. So auto and homeowner insurance, it protect the potential, future event, okay? And it's paid for with the monthly annual premium. Remember we covered that, PITI, right? So a title insurance policy, it insures against past event for like sometimes they charge like one-time premium paid to the close of the escrow. So any title defect that include another person claiming an ownership interest or it's improperly recorded documents, or it's a fraud or forgery or liens, right? So any easement, other, these kind, it covers, insurance policy covers that. So that's why sometimes it's better to have that, you know, ask for the title search and ask for the title insurance to cover all that, what happened previously. Home appraisal, about that property, we covered that, right? Because the home appraisal, it determined the estimate market value of your, of the property you are buying. So the appraiser, they evaluate it based on the condition and the geographic location, that is of your property, or the value of nearby houses, any recent sales, any neighborhood, any growth and potential, among other factors. So the mortgage lenders, they use this kind of information to make sure the amount you are, borrowing to support the home value, right? Because there's a risk. It could be always a risk for low appraisal. Sometimes lender, they they won't go through with the transaction for that price, because seller, they might adjust the sale price accordingly, right? But they might not adjust the sale price. So appraisal value isn't binding figure. What the seller sells, you know, for the buyer, it determines the sale price. So the situation might be that you negotiate a deal with the seller for that price, and already like whatever initially you wanted after the appraisal is being done. So due to home selling in a buyer's market and its location in declining market area, sometimes this may slow or disrupt the closing process, guys, right? Because while further negotiations are conducted, um, you know, it's a it's another long process. If seller might say, no, I'm not bringing my price down, right? So that's why another point I want to make, after that, all that is done, you set the time and date of the closing, because the closing date, that is also a negotiable factor. Okay. Um, and also during the acceptance phase of the home sale, during the transaction. So when making an offer, the buyer will include a closing date, and depending on the seller's circumstances, it might be acceptable, or it could be counted with other terms. So don't just to choose a date casually. The right date can be ensure that the process is going smoothly, and the closing and closing cost and wrong date, once it's put the you as a home buyer at risk of not closing on time. So make sure you talk to your whoever is helping you for this real estate transaction, or talk to your title company, or talk to your lender. That is again, uh, don't just choose the date casually, because in order to have a smooth process and reduce closing cost, uh, once the date is written, that's it. It cannot be changed. And sometimes that's not closing on time, because then you have to go through um, with lender, with title company, for changing all these dates, and if there's any inspection problems or lender problem, you know, you and it end up sometimes costing you the money. So, uh, that can also, if you're planning to move, it can increase. Also, another point I want to make, increase expenses, and even losing, sometime deal is closed and you are the property owner, and it could be uh, sometimes bad news. So expenses are actually protected through the closing date, and so generally there no better day of the month to close that deal. So however, in financing a mortgage, there are sometimes difference in that, in what is collected as a prepay item and when the first mortgage payment is due. Okay, so make sure your lender is explaining that to you. Even the title company explain all that to you. Okay, guys, um, we will continue with this, and I know that there's a lot more goes into when you're closing the deal. I want to make sure that you guys know it, all the points, and we will be keep going and keep covering. Okay. All right, guys. Thank you so much for listening, and liking, sharing, subscribing, and your wonderful comments. And thank you so much for everything. And I will keep continue and helping you guys uh, to let you know that you are not alone. And I'm so glad so many of you wrote that you know so much about home buying process now, and you are not afraid after watching this channel. You writing all those comments for me. That definitely makes my day. That how much these videos are helping you guys and it's guiding you guys. Alrighty. Again, thank you so much. And this is Ruby Kaur Singh with the Real Estate News School. And I will talk to you soon. Have a great one. Thank you guys. Take care. Bye.